Good day, guys. Happy New Week. I hope your previous week was nice. On today's video, we'll talk about order blocks. I observed that on the page, I don't have a complete SMC playlist, and I thought about creating like a go-to playlist for you guys to watch, then formulate your strategy based off the playlist. So I'll give you a piece of strategy builder on this order block topic. So let's talk about order blocks. What are order blocks? Order blocks are zones on a chart where big institutions like banks, the hedge funds, and large players place large buy or sell orders, and those orders cause price to move in a very drastic manner. So in a simple term, an order block is the last candle before a strong move up or down. Now let's do like an illustration of what I'm talking about. For example, you have market going in a bullish direction. So another block is the last candle before this bullish movement or this bullish swing movement. So around this portion where you have the beginning of this bullish movement, there's going to be another block there. Around this portion where you have the beginning of this bullish movement, there's going to be another block there. Same thing applies with this. Why? Because it's only the large players that can move the market from this point to this point. We retail traders don't have the amount of volume to push the market drastically like this. Now, these large moves in the market are like footprints for us to determine where the large players are putting their money. So if we keep seeing continuous uptrends, continuous push, impulsive moves to the upside, it means that the large players are putting their money in demand zones. So it means on our future prediction on a chart like this, we are looking for the market to come back into a demand zone and give us a trading opportunity to continue buying. Now, on the chart, it won't look like this, obviously. It will look like a candlestick and what's it called? And it will have a formation basically. So let us go to the chart so I can show you guys one or two formations of how the other blocks always look like. So this is the chart of Euro USD daily time frame. Like I said, if you look at the chart, let's just use a line chart so you can see how the market moves in waves. Obviously, you can see a bullish swing, a pullback, a bullish swing, a pullback, a bullish swing, a pullback. Same thing happening here. So in this bullish swing, like I said in our illustration, I said when we have a bullish swing, around the portion that starts the swing, we are going to see our order blocks there. So I mean portions like this. If you look at this move, we can see it like this. So taking this for example, it means our order blocks, they reside on pivot points like this, around us somewhere here also, around points like this also, then points like this. So let's now go back to the candlestick chart so that I can show you how to spot them. Back to the candlestick chart. So like I said, they are the last candle before an impulsive move to a direction, either up or down. Now, if you observe this place from the left to the right, what is the last candle before this impulsive move? As you can see, it is this candle here, this black candle, this last black candle. This is the candle before the impulsive move. So this is our order block in this case. If you look at the second impulsive move here, what is the last candle before this impulsive move? If you can see, the last candle is this blue candle. This blue candle here. This is the last candle. You should extend that. That's our order block. What's the last candle before this impulsive move? This black candle is the last candle before the impulsive move. If you can see, the candle with the steepest wick is what we are calling the last candle, not this blue one in this case. Why? Because the wick, they see a candle beside it that is wick is lower than this candle here. So this black candle is what we'll call our order block. On this situation, our order block is this blue candle here. Now, for us to now take decisions based off of this order block, what do we do? How do we treat them? Like I said, the last candle before an impulsive move. In that last candle, it means there were orders on the last candle. All we are looking for is the market should come back into the zone of that candle when we extend it to the future. We can't use the order blocks in the past. We can use them only in the future. So if peradventure we have a bullish movement and we have a pullback into that order block region, we should expect to see bullish action. Why? Because there were orders here that allowed the markets push this aggressively. So we are trying to believe that there are still orders that the big institutions are still yet to fill around this region. So we try as much as possible to position ourselves in this region to take a buy to the upside. Now, if you have extended your order block to the future, you can't force the market to come back to your order block. You have to wait for the market to come back a particular day in the future. Now, if you observe, this order block here has already been tested. So it means that price has already tapped into this zone. There are rules I will give you concerning the valid order blocks to use and the ones to avoid. Order blocks like this can be avoided. Why? Because it has already been tapped into. So let's go to a smaller time frame. That way we can see cleaner order blocks that we can capitalize off of. So if you look at the trend in this portion, let's cut price here so that I can illustrate better. If you look at the trend in this portion, we can see that it was a downtrend. Then all of a sudden we started having a bullish reaction. That is a low, a high, a higher low, a higher high. Then we are expecting continuous bullish action, a new high. So if you observe, you can see that as this market keeps creating a low, a high, a higher low, a higher high, it leaves other blocks behind. It leaves other blocks behind when it does its impulsive move. So if you look at this zone, this portion is the order block. It has not been tested. So in the future, we are expecting the price of Euro USD to come and tap into this order block for us to take our buy position and target our take profit. So let's use this for example and see how it played out. So we have the market continuing in its bullish direction. Our business is to wait. Like I said, our job in trading is to find out where we are going to capitalize on. Then we wait for the future price to come into that zone. Then we can now take our trade from there. As you can see, this is another block that was respected very much. So it is trading. It is not magic or rocket science. So you have to still understand that it's not 100% correct. Sometimes you will lose, sometimes you win. So in this case, this is a winning trade for a 3R. Now, we can keep going on to get more order blocks and find trades on those order blocks like this. There are rules I want to give you to guide your order block journey. I think I'll give you those rules in the next video. But for this video, just make sure you practice spotting order blocks. Let me show you some order blocks that failed, because it's not every time you see them work out like this. Now this is another order block under here, under this zone. So we expect market to come back, then tap into here, then buy right. Let's see what happened. Did he ever get there? If it did, okay, if you observe, there's another order block that has been created here also. In our next video, I'll give you guys some rules to always follow when you are spotting quality order blocks. But for now, I don't want the video to be too long. So let's call this a part 1, then call the other one a part 2. I want you to see one fail. Okay, if you observe, this is another order block here, and it's already it's playing out in this case, but did I play that? Mind you, as you can see, I'm taking the other blocks in accordance with the trend direction. I'm not looking for bearish order blocks in this bullish trend. I'm looking for bullish order blocks in a bullish trend. So beware of following your trend no matter what. So this is not exactly, as you can see, this is order block that has failed. This is another block that has failed. So remember there was another block under here also. So let's imagine we take these two trades. It means we would have lost the first one, then the second one. Let's see what happened. All right, we would have won the second one. So this is the idea of trading. You lose some, you win some. The main concept that will keep you floating is when you are making more when you are winning, and you are losing less when you are losing. For example, on this case, we made about 3R thereabouts. Then on this case, we made almost 3R also. Then on this case, we made almost 3R, more than 3R. Then this case, we lost 1R. Why? Because we are risking 1 to make almost 3 on this case. So imagine making 3, 3, 3. That is 9R. Then you are just losing 1. This means at the end of the day, your net profit is going to be 8R. That's 8x any amount you risk. So I want you to go back to your drawing board, backtest this, and come up with something that you can use in your own day trading. Come up with a system that you can follow back to back. I'll make another video concerning more quality order blocks to look out for. You can attach other videos on my page. Try to form something for yourself in terms of strategy development. You can use order block with trend lines. You can use them with support zones. You can use them with breakup structures and liquidity. You can use them with different concepts. So I have a couple of concepts on my page. So just go around, look for something that you can fuse with your order block to make it stronger. Though I'll post a new video maybe next week on more quality order blocks. But for this video, I hope you guys learned a thing or two. See you guys in the next video. Don't forget to like, subscribe, share, comment, and I'll see you in the next video. Peace out.